everybody, thanks for tuning in. In today's video, I'd like to chat about swing trading, how to trade less and profit more. So to do that, we're going to be looking at EURUSD. We're going to be going over a few examples here in recent price action. And I'd like to go over some tips as well that I have for the basics of swing trading. So the number one thing I get asked is, how do I trade with a 9-to-5 job? How do I trade only using the higher time frames if I'm not comfortable with the lower time frames? These are questions I get asked very frequently. So I decided to make this video to hopefully clear up some of those questions and show you clear examples of how you can trade while maintaining a full-time job or a part-time job or managing a family. It's all entirely possible. It just requires a little bit of practice and understanding. So let's go over that today, and hopefully I can clear some of these things up for you and inspire you for your future trading. So I just want to start by going over some of the tips here on the left. So swing trading basics. My number one tip is pick your preferred time frames. I'd recommend 2 to 3. If you're swing trading, you really don't need any more than that. So that could be, for example, the 4-hour time frame and the daily time frame, right? You need a higher time frame and a lower time frame. So in this example, what I'm going to be utilizing is the 4-hour time frame for my directional bias and the 1-hour time frame for break of structures and mitigations and entries. But this is completely up to you, whatever you prefer, whatever time frame works best for you. Like I said, you could go to the 4-hour and the daily. You could even utilize the daily and the weekly if you really want to. But I'm going to get into some of those details in a little bit later on in these tips. Okay, so like I said, pick your preferred time frames, 2 to 3. So trading from higher time frames makes analysis easier, but it also makes trading less frequent. So what do I mean by that? Well, the higher time frame you go, yes, it holds more weight. The analysis is more likely to be correct rather than lower time frames where there's a lot of price action going on, and it can be hard to decipher what's more important, what's going to hold weight on the lower time frames if you're not that experienced or comfortable with those lower time frames. But on the higher time frames, oftentimes when you locate a point of interest and it gets mitigated, it typically holds its weight quite well. So there's good trading opportunities in that sense. But the second part of this, it makes trading less frequent. What I mean by that is the higher time frame you go, each candle represents more and more time, right? So currently I'm on the 1-hour time frame. Each of these candlesticks represents 1 hour of price data. So if I were to go to the 4-hour time frame, these candlesticks would get a lot bigger, and there's a lot less of them because instead of 1 hour of data, they represent 4 hours each. Okay, so you go to the daily time frame, it's even more significant. You get a lot less candles because they represent more time. So the thing is, if you're trading based off of these higher time frames, you're going to be trading less frequently because it's going to take a lot more time for price to reach your areas of interest. Okay, so just by nature, you're going to be taking less trades than you would be if you were executing on a 5-minute time frame or a 15-minute time frame, or potentially even lower than that. So there wouldn't be really intraday trading necessarily. Your trades would be few and far between, right? So tip number 2, use the higher time frame as an anchor for your overall directional bias. So like I mentioned in my example here, I'm going to be using the 4-hour time frame for my directional bias, and I'm going to be using the 1-hour time frame for the actual trading itself. Okay, so my break of structures, locating those, locating the points that would be mitigated, which would result in an entry. Okay, so like I said, 4-hour for direction. So in this example here on EURUSD, on the 4-hour time frame, we can clearly see that the market is bearish. It was pretty range bound for quite some time, moving basically sideways. Made a large push up, grabbing a lot of liquidity, and then made its way back down, creating a new break of structure, breaking this swing low here. However, we're currently reacting to a 1-hour demand zone, and price kind of stalled out here. So we'll play price forward in a little bit and go through some trade examples. But for now, let's continue with these tips here. So like I said, 4-hour for direction and 1 hour, For example, for my higher time frame, 4-hour time frame for direction and large POIs. So what that can also mean is, as you can see up here, I've already located a 4-hour time frame point of interest, right? We have this bullish candle right before the bearish impulsive drop to the downside. So I've located that. Of course, that could be refined down to the one hour time frame. But in this case, I like the weight it holds on the 4-hour time frame, so I'm going to leave it there for now. But that's basically what I mean. So you can use the higher time frame for your directional bias and to locate large POIs, points of interest, that can later be refined on a lower time frame. So tip number 3, use your lower time frame for break of structure, mitigation, and entry. For example, like I said, on this example that I'm going to be going through today, I'm going to be using the 1-hour time frame for locating my breaks of structure and refined points of interest. Tip number 4, this one's very important, guys. You have to trail your stop loss or take partial profits, but don't close the position or positions early. So to hold positions long term, you must have a planned management system. And this also goes hand in hand with trading psychology because, as I'm sure many of you know, it is psychologically difficult to hold trades long term. As soon as you see significant profits, you're going to be tempted to close those out early and just bank them. But in order to actually swing trade or hold positions for any amount of time that's, over a day or so, it does require a strong mindset. You have to be confident in your trades. You have to be confident in your analysis. And you have to be confident in, not confident, but you have to be comfortable with potentially seeing some drawdown, right? If things aren't going your way in the beginning, you need to be comfortable with that. Or if you reach significant profit, you need to understand that the market doesn't just go up or go down forever. It needs to make retracements. It moves in waves, as we all know. So that means you're going to see big profits and then you're going to see them slightly diminish. And you need to be comfortable holding through those corrective periods in the market in order to reach new highs or new lows, depending if you're going long or short. So there is that psychology that plays into it as well. So that's a big part of it. So just to clarify, as I said, you have to trail your stop loss or take partial profits, but don't close the position or positions early. Okay, you have to have a planned management system. We can go over that in detail throughout the trading example that I'm going to go through today. But for now, I just wanted to briefly run through these tips. And let's get into the analysis side of this. Okay, so like I said, I'm on the 4-hour time frame. Now I'm on the 1-hour time frame on EURUSD. Let me just hide this text over here, just so it's not in the way. So as you can see, I already located my higher time frame 4-hour point of interest. Okay. My directional bias overall is short. However, we've come across this 1-hour demand zone far to the left, and it seems like price is stalling out here. So instead of just continuing my short bias, I'd like to see how price reacts to this level. So when I'm trading, I try to be reactive, right? I like to see what the market presents and trade based on that. So if this presents itself as a good reversal point to trade into the higher time frame point of interest, then so be it. I'm not going to be married to the short bias. I will simply react to what the market shows me. So currently we've kind of stalled out here at this 1-hour demand zone. I'd like to play price forward a little bit and see how this plays out. Now, in order to get long from here, I would need to see structural breaks, right? There has to be something like that to show bullish intent, because currently we have high points here. We would need to see those broken to show bullish intent, that buyers are going to be trading to the upside and that we can look for long opportunities. Okay. So let me play price forward a bit and see if we can get long on this pair. Okay. So right there, we do have an opportunity. I played price forward one candle too much. So let me explain why this is an opportunity to get long on this pair, okay? It's pretty simple. This large impulsive bullish candle broke through structure. So I just label that break of structure on the upside. So that's a clear break of structure, right? It's a full body candle. It broke through this recent high. So that is showing clear bullish intent. So technically we could target the candle that was responsible for that move, the last low volume candle prior to the move that broke structure, which would be this candle right here, okay? So this would be a very aggressive entry. I just want to clarify that right off the bat. I am going to place a position tool here just for the purpose of this example. But yes, this is a very aggressive position because it's based on the fact that we just recently broke structure, but we're on the 1 hour time frame, right? So if we scale up to higher time frames, this would seem much more insignificant. So it is a little bit risky to enter upon the first break of structure. If you enter upon the second break of structure, if there is one, that's a lot less risky, of course. That's more conservative rather than aggressive. And upon the third break of structure, if there is one, that's even more safe, right? Because as we all know, it takes at least 2 breaks of structure to solidify basically a new trend or a new temporary direction in the market. So I am going to place the tool here, like I said, the position tool, but as I mentioned, it is a little bit risky. Now, in terms of target, this is the beauty of swing trading, okay? This might seem crazy to some people, but swing trading is all about trading from zone to zone. Okay, that's all it is, just going zone to zone. So we've identified high probability zones, right? We have the 1 hour zone where price seems to be struggling to break through to the downside. So we're going to try and take advantage of that. And then we also have this 4 hour zone way on top as our overall extreme target. Now, if we jump back to the 4 hour time frame just briefly, of course, we do have areas like this. This is a significant supply zone right here, right? Because it was responsible for this break of structure. So that can't be ignored, right? So if and when price makes it up to that point, it might be a good idea to trail your stop loss just below it or take significant partial profits at that level. So if price were to do this and continue the overall short bias on the higher time frames, then at least we'd walk away with something rather than nothing. Okay, so it's important to pay attention to areas like this, but it's also important with swing trading to have a very extreme target. Okay, so this 4 hour zone represents a very extreme target. So that's where I would set the hard take profit, as I showed here. Let's jump back to the 1 hour time frame. So this position represents about 16R. Okay, so if you're risking 1% capital, you would gain 16% if this position reaches its potential. Okay, so let me play price forward and we'll see how this goes. So right there it's tapped into, as we noticed before when I accidentally played price forward a little bit too much. So we're tapped into the trade. Now, what are we looking for to signify health in this position, right? I want to know if this position is going to be healthy long term. And so what I have to look for is basically the same reason we entered the trade, right? We have a new high now. Price is trading lower in a corrective manner. What I would like to see to confirm my bias here is a second break of structure of this area, okay? So let's see if we get that. Trade back into our entry. That's why it's good not to move your stop loss to break even too soon, because if we were to move it to break even at, let's say, 1R, which was achieved somewhere around here, then we would have been taken out for break even because price came right back to it. So no need to rush moving your stop loss to break even. We just want to see how price moves, okay? Let's continue. Okay, so we do, once again, I played price forward a little bit too much, I guess, but we do have another break of structure here. Price clearly created new highs. Although they're mostly wicks, it is still a clean break of structure because this was our previous high and we clearly traded much higher than that, right? So that is a clean break of structure, which represents another trading opportunity. Now, What I'm about to go over next is completely personal. It's completely up to you. And that is scaling into positions or stacking positions, okay? So if you wanted to, you could just take this one trade, see how it goes, and potentially ride it all the way up to this 4-hour zone. And that would represent 16R, which is absolutely phenomenal, right? That's a huge, huge trade. So you could leave it at that if you really wanted to. But the beauty of swing trading is that you can just stack positions, right? Well, you can do that in intraday trading as well, but it's much easier with swing trading because you're targeting very long moves. So there's a lot of potential to scale in and stack positions. So in this example that I'm going over today, in today's video, I would like to stack positions to show you the true potential of swing trading, these long-term moves. So let's go ahead and do just that. So as we saw, there was a break of structure, which means we have to locate the point of origin for that break of structure, which is this small bearish candle right here. That's the last point of demand before price exploded to the upside and broke structure. So this represents another scale-in opportunity. Now, as I mentioned, I played price forward a little bit too quickly because we already tapped into that zone. We can put our stop loss just below the recent low. Let's say 19 pips, just below this low right here. And we can take that target to the exact same area as the last position. So now you can start to see the power of this, right? Because now we have two 16R opportunities stacked on top of each other. It's all within the same directional bias, but what we're doing here is just simply trading the breaks of structure and the mitigations, right? As I mentioned up here, H4 bias, 1 hour break of structure plus mitigation, those are our entries, right? The break of structure and then the mitigation of the point of origin that caused that break of structure. May sound complicated, but it's actually quite simple. So let's keep going through these examples and see what we can learn. Okay, so we have another break of structure. Let me start to drag these out a little bit, because we're going to need more room. Okay, so as you can see, there was our high here, right, which was the new high that broke this structure, and now it's happened once more. We have a new high here that broke this structure. So we'll map that out, label it. And what's the point of origin for this move? It would be this bearish candle right here prior to the impulsive move to the upside. So that could be a new entry. You know what? Actually, what I'm going to do here is rein these back a little bit. We'll extend them later, but for now, let's just keep them small so that we can focus on whatever new position we're going to be stacking. So let's set another order upon this point of interest. Stop loss, it doesn't need to be here now because our new point of invalidation would be just below this candle, right? If price traded below that, we wouldn't want to be in this position anymore. So we can set that at about 20 pips. Mind you, these stop losses are much bigger than most intraday traders are used to, but keep in mind we're trading on the higher time frame strictly in this example, so the stop losses will of course be larger, but so will the take profits, right? All that matters is the risk to reward. Mind you, not each one of these positions may be triggered, but we're going to go through this together and see what happens. Okay, really broke to the upside, so we might not get a retracement. Let's see what happens. Okay. All right, so I'm going to hide this position for now, but I'm going to leave this rectangle tool here just to highlight this candle because it is a potential outcome that price would retrace back to here and trigger that entry. So I'm just going to hide the position tool for now just to keep things clean, but I'll leave the rectangle there. Now we have a new break of structure here, and it is significant. Let's label that, which means we have a new point of origin to target, what you could call the order block or refined demand zone. I'm also going to hide this rectangle tool. Actually, I'll just delete it for now. That was the supply zone that we identified on the 4-hour time frame as a potential point to trail the stop loss or take partial profits. So let's see if we can get tapped into this trade. Stop loss only has to be below this candle formation here. Technically, that would be our point of invalidation. That's what created the impulsive break to the upside. That's what created imbalance in the market right here in its impulsive nature. So our point of invalidation would be just below this candle formation. So we can keep the stop loss at 12 pips, I guess. That would be fine. Target the exact same area as the previous trades. Now this is interesting because the risk to reward ratio is significantly higher than these two, yet we're trading so much higher up, right? So that's interesting because these stop losses were about 20 pips and this stop loss is only 12 pips. So it's a little bit tighter, which means we get a much larger risk to reward ratio. So let's play this forward and see if we get tapped in. We do. That's a little bit tight. You can see there was a bit of drawdown there, but we are triggered into the trade. So what would represent good health in this position is if we were to see a break of structure of this area. And if that happens, we would also potentially have a new trading opportunity as well. So you see how this is working, right? It's actually quite simple when you look at it from a macro perspective. We're simply trading the breaks of structure and the mitigations, okay? Every time there's a break of structure, we simply locate the point of origin for that break of structure, right? The last low momentum candle before the momentum kicked in. We locate that and target it because price will mitigate it or will most likely mitigate it. Okay, so we locate the break of structure, we locate where there would be a potential mitigation, and that's where we enter. So it's actually quite simple. And as you can see, we have 3 profitable positions so far. Like I mentioned at the very beginning too, if you don't have the time to enter these new stacked positions or you don't want to incur that risk, that additional risk, you could simply enter the first position here and just leave that and manage it accordingly as it progresses by taking partial profits or trailing your stop loss, okay? You don't have to take all these stacked positions, but what I'm doing here in this example is showing you the potential of swing trading and how you don't need to be on the 1 minute and the 3 minute and the 5 minute time frame looking for those low time frame entries. What you can do if you don't have the time to sit on the charts is exactly what I'm showing you right here. You can enter off the 1 hour and the 4 hour time frame. There's plenty of opportunity utilizing this strategy. For me personally, I do like to use the lower time frames, but that's just because I have the time to sit on the charts anyways, so I might as well look for those refined opportunities and that massive risk to reward ratio potential. But like I said, this is perfect for somebody who has a busy lifestyle with a family or a 9-to-5 job, or if you're traveling often, those kinds of things, right? So just wanted to briefly mention that you don't have to take all these trades, but it's a very powerful example to go over to show you the potential in the market. Okay, so we do have another break of structure here. Let me take this back a little bit. We have a clear break of these highs here. The point of origin, of course, would be this candle here, right? And you can see it's very simple to actually identify these zones. We had all these low momentum candles, and then all of a sudden, a clear break to the upside. So the very last candle, the very last refined point of demand before that impulsive break to the upside was this small bearish candle right here. So that's what I'm going to target for an entry, a potential entry. So let's place the parameter tool here. And we'll see if we get tapped in. The point of invalidation is just below this candle formation, of course. So we could probably get away with actually 10 pips here. That might be a little bit aggressive. Maybe we could go 12, but yeah, no, let's go 12. Let's go 12 pips just to keep it safe. Target the exact same area, the 4-hour zone, which is becoming more and more highly probable for price to reach. As you can see, we're pretty far in this bullish leg now. We're getting pretty close to that 4-hour zone, so this is looking more and more likely to be triggered. Okay, let's play price forward and see if we get tapped into this one too. Okay. Yeah, we sure do. Let me move this over. So this was most likely news driven. You only see candles like that are news driven. That's a very significant candle. It also represents another breakout structure, obviously. Okay, so in terms of new trade potential here, I don't really see a clear opportunity, to be honest. I don't, especially if it was surrounded by high impact news. I don't think I'd be entering another trade based on this area. There's no clean point of interest like there was in all these other examples. In all of these other trades here, we had a clear point of interest, usually in the form of a bullish engulfing candlestick formation, right? Because that represents a low momentum candle and then a high momentum candle taking over. And those are perfect for the breakout structure plus mitigation entries, okay? That bullish engulfing formation is probably the only candlestick formation that I pay attention to with this strategy. So because we don't have a clear bullish engulfing formation here, we don't have a clear point of interest to target, I think I'm okay just letting these 4 trades run. So we'll see what happens. Okay, almost at the take profit. Oh, there we go. There we go. Let me break out my calculator here quickly, because this is absurd profit. So we have 16.07. We have 16.25. We have 18.35. And we have 15.66. So that represents a mind-blowing 63.33R. Okay. Now let's go ahead and measure how long this took. From the moment of our first entry to the moment of the full take profit, that was 6 days and 11 hours. So let's just call it 6 days. So within 1 week of swing trading, this would be classified as swing trading, right? Intraday trading is typically in and out within a day or less. This is clearly classified as swing trading. So in about 1 week, a massive 66.33R could have been achieved here, okay? This is very simple stuff, so you don't need to be sitting on your charts all the time for this. What you can do is, every time there's a new high created, I could have set an alert here. Okay, can't do that in replay mode, but you get the point, right? Every time there was a new high created, right here, I could have set an alert at this high and then walked away from my chart. And then as soon as price broke that high, I would have gotten a notification on my phone or laptop, iPad, whatever device you have. You get a notification from TradingView. As soon as you get that notification, then you can come back to your chart, or on your computer or your phone or whatever. And then as soon as you're at your chart, you can locate the point of interest, enter the trade, and then walk away again. Set a new alert for this new high, set a new alert for this one, this one, this one, as it continues, right? Every time you get that alert triggered, you can come back to your chart and you can figure out if there's a new potential trading opportunity for you or not. And like I said, if you're not comfortable with adding all these positions, you can simply stick to the main one. Like I said, this was 16R, right? And it only took 6 days to complete. So 16R in 6 days, guys, you could take the rest of the month off. Like that's beyond an FTMO challenge. That's, you know, beyond the 10% target monthly. That's enough to just take the rest of the month off and go on vacation if you wanted to. Like, you don't need to add all these extra positions, but it is very possible. And this here represents such clean structure and price action, which we often see on EURUSD and other major pairs on higher time frames. Because if we want to briefly talk about management here, the management was actually beautiful. So as you can see, none of our higher lows here were actually violated. This was such a clean trend that none of these lows were actually violated. Right here we had equal lows, which is a little bit iffy, but even so, it wasn't violated. Price never traded below this point. So each time there was a new low created, you could have moved your stop loss to that point, right? So you could have trailed your stop loss along this entire trade, and that would have given you more psychological confidence to actually hold these positions, because you know that, let's say your stop loss was right here at one point. Right? Let's say at one point your stop loss was here for these two trades, before you even entered this one. You would feel confident that if price were to reverse on you, it would hit your stop loss and you would still profit from these two positions. You wouldn't be at a loss. You wouldn't even be at a break even. You would actually walk away with profit, and you'd be able to bank that and move on happily, right? So you could have moved this stop loss to here next. And then, of course, after that, it would have just hit take profit without retracing whatsoever. But let me bring up the... is it going to load? No. Okay, we're stalling out for a bit. But my point remains the same. You can trail your stop loss or take partial profits along the way, and you can hold these positions long term. And yeah, that's the beauty of swing trading, guys. So as you can see, you don't need to sit on the charts all day. You don't need to be glued to the screen on the 1 minute time frame like you see so many people do. It's completely unnecessary. If that suits your style, then that's totally fine. The thing about trading is you got to do what's best for you and what suits your lifestyle. And nobody else can tell you what that looks like, okay? You have to be the judge of how your trading should look based on your lifestyle and your schedule. Okay, so when it comes to swing trading like this, sessions don't matter, right? You shouldn't have to pay attention to trading sessions, Asian, London, New York, whatever. Whenever you're awake, look for opportunities. You know, whenever you have time, look for these opportunities. Utilize the fact that we have limit orders in our favor. We can set future orders for a price point where price hasn't actually reached yet. And then we can walk away from our charts and price can trigger that order while we're out and about working with family, on vacation, whatever the case may be. We can utilize those limit orders, and we don't have to be glued to the charts all the time. So I really hope this video opened your eyes a bit about higher time frame trading with this refined supply and demand strategy. It is extremely powerful, as you can see. Just in these 4 trades over the course of 6, almost 7 days, we can secure over 66R, which is absolutely absurd. Okay, if you're risking 1%, that represents 66% gain on your capital. And even if you're risking 0.5%, which I often do, that still represents 33R within 6 days, almost 7 days. That to me is absurd. And it's very inspirational and motivational. So I hope that it had that effect on you guys as well. If you would like to learn more about the strategy that I utilized in this video, then please consider joining our private Discord community. Within this community, I offer a full video course with all of these topics that you see here. Within these course modules, there's actually multiple videos. It's not just one. And aside from that, we have much more value to offer here. As you can see, I offer daily analysis. I show what I'm looking at on an intraday basis for typically Euro USD, sometimes GBP, JPY, and other pairs as well. We have a team analysis section where our coaches offer their view on the market as well and the pairs that they usually look at. We have a section for case studies where me and other coaches, we dive into specific chart examples and trading examples that represent a lot of value and lessons to be learned. We also have a section for weekly analysis where I share a market overview for typically Euro USD. Once again, it's the pair I usually trade, just to give members an overall outlook on the higher time frame perspective. Of course, we have a member zone as well with a chat room, a section for questions, a section for members to share their trade ideas, as well as losing and winning trades, because there's much to be learned from both, and much more as well. A resources section where we also share our ebook that is for you to download for life if you're a community member. It shows the full strategy in PDF format. Okay, so this is something you'd be interested in. Just check the link in the description below. If you're not interested in that at all, no worries. Just stay tuned to this YouTube channel because I will be continuing to provide free educational content. Thanks for watching, guys.